G'day, recording this video on Sunday, the 19th of February 2023, just gone 2:27 p.m. Chicago time. Do hope you are doing well. So before getting into the video, which is going to be a weekend futures market recap, just want to say last week was a super busy week and I got a ton of emails and I've been very slow responding to them. So if you sent me an email, I will try and get to it today. So expect a response kind of shortly. So apologies for that, but sometimes I just get overwhelmed. Anyway, let us talk about the futures markets. This is the weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. And we always deal with the E-mini first. Let's start with that. Choppy week on the E-mini, and we didn't get the break in the ags and crude this week. So I was off with last weekend's video, but we're going to recap those charts kind of shortly. Still think we're in an uptrend on the E-mini, and I'll show you why I think that is, because we're in a confirmed uptrend on the better indicators on the daily chart. So this is the typical setup with everything to do with volume on the left-hand side, everything to do with price on the right-hand side. And when we get volume and price kind of working together, both in an uptrend or downtrend, the backgrounds are printed in red for an uptrend and gray for a downtrend. So we got red backgrounds here, which means we are above the trailing stop in Better Pro-Am on the daily chart here. You can see that because all the professionals came in here on the dip down in October at 3600, and since then we've just been working ourselves above that trailing stop. And on better sine wave here, the bars are painted in red, which means we're in an uptrend. But we're just consolidating at the moment and waiting for the next break up, and getting through this kind of 41.94 level up here, this intermediate time frame, is going to be the trigger. Breaking it down to the 135-minute chart, so there are exactly 3 135-minute bars in a day session, and this is why we're having trouble at the moment, because the professionals kind of came in here and took profits. Here's them getting in October, the amateurs getting wrong-footed here. We come down with exhaustion sell, bullish divergence and a flush pattern here. That's the volume kind of getting on the wrong side that now needs to be taken out on the upside. You can see here this 4200 level on this chart is absolutely key. So we're just consolidating down because the professionals are taking profits here, and you can see now the background here is in black because this is a dark zone where we don't have confirmation of price and volume. With volume here, we've just broken below the trailing stop on Better Pro-Am, but the bars are still red. So we're just waiting and waiting for this to get resolved, and then we'll kind of continue, hopefully, to the upside. Going down another time frame, 45-minute chart, exactly 3 45-minute bars in a 135-minute chart. And you can see here we're in a confirmed downtrend. So the background is in gray, and that's because better sine wave is white, showing a downtrend, and we broke below Better Pro-Am on this chart. And here you can see all those professionals taking profits up there at 4200, and so we're kind of settling down to wait for the next kind of cross on this time frame, the highest time frame here, where these bars kind of come together, and that'll kind of give us support. And on the 15-minute chart, here I've just marked where the beginning and the end of the week are. So this is the vertical timeline indicator, and where I've added a weekly yellow solid line here. And you can see there's the professionals taking profits, exhaustion buy, bearish divergence, whole bunch of blue professional bars into the highs of 4200, take profits. And then now on this time frame, you can see the professionals starting to get interested. So we got blue professional bars down here with exhaustion sell. And this was a choppy week this week. So we started off on the Sunday into the Monday, bang, with a big kind of race away move. Kind of found resistance at this point here. This is a dark zone. Again, you can see here where we don't have confirmation with the two different trending systems, the volume and the price-based trending systems. And that's where we should be looking at kind of taking kind of medium-term trends in the dark zone, kind of looking for a resumption of the trend here, where we get this breakthrough support, bang, we're into a downtrend here. But we're starting to catch here. When I was talking about, I was still bullish last weekend into this kind of move. On the lower time frames, you could see that this area was starting to catch, but on the intermediate time frames, say this 15-minute bar, you can see there's no blue professional bars there. So that was just a reactionary kind of move. But now they're starting to do the reverse. So let's see, this needs to get resolved, and we need to break into an uptrend on better sine wave here, where the bars will turn red. So we're in a downtrend kind of currently. And then we go down to the 13,005 chart here, because this allows us to see the overnight activity as well. And again, just looking here, we're in a confirmed downtrend with grey background. Here's a good entry point here for this kind of reactionary move. We're in a dark zone, exhaustion buy, bearish divergence, getting rid of a whole bunch of people being wrong-footed, kind of buying into that move, and then as soon as we kind of turn around, we get a resumption of the downtrend here. So the 13,500 tip bar chart, not a whole bunch of blue professional bars at the lows here. We got some taking opportunity to get in at the end of Friday. We're starting to break into an uptrend here. We're kind of oversold, bullish divergence, flush pattern down here. That's kind of nice. So we still could get a little bit of a resumption. You can see here, this is the move Sunday into Monday here. With this move, and that's why I was kind of bullish at the end of last week, because all of those Rambo patterns, that's amateurs getting wrong-footed, and that's a Rambo to Rambo channel. So they're kind of just like here, they're kind of going long, they get wrong-footed, we kind of move the other way, they got wrong-footed at this point here, and they're taken out on their stops as soon as we break above here, and that's what's going on there with the Rambo pattern. So that was the activity that we were playing off last week, reaction against the amateurs kind of leading the charge here. Remember, Rambo is a potential reversal of an amateur breakout, so the amateurs are leading the move, they get wrong-footed, kind of break the other way. So we don't, on the 13,500 tip bar chart, don't have a lot kind of confirmation in terms of professional activity down there. So, but price-wise, you know, we've kind of moved up. We could have a little bit of a reaction rally, and then the professionals step in again to kind of force it down and test into those lows where they'll maybe kind of pick it up again. So yeah, choppy activity on the E-mini, still in the downtrend, but waiting for kind of confirmation of the next kind of area that this will catch, and we'll get kind of signals to kind of go long on the E-mini. Now, last weekend's video was pretty bullish on the ags, and we didn't get the breakout that I was kind of hoping for. I was long soybeans this week, waiting for that break. Didn't go my way, kind of got out with a loss. And on the lower time frame charts, we had signals to go long on the euro. So I got into the euro instead. And that's kind of worked out, that trade kind of worked out on Friday for me, which is kind of good. So this week's trading for me, I'm up a little bit, but it didn't reach my target this week. And it was all because I was a little bit too anxious on that soybeans trade, and it didn't work out. But we'll go down to the tip bar charts and show you that. But before going to that, let me show you why I think that sector is interesting. So all of the ags are interesting to me because DBA is starting to signal, and on the longer time frame charts you can see those ag markets starting to look interesting. So DBA is an ETF that tracks the largest ag futures. One of the big components there is actually sugar that I don't look at kind of on a regular basis. On this, you know, kind of higher time frame chart, the ags are looking interesting. So the 130-minute chart gives us exactly 3 130-minute bars in a day session of DBA. And you can see here, this is what it's been doing over the last several months. So we topped out with exhaustion buy patterns, a whole bunch of blue professional bars, bearish divergence comes in, and we break through trailing support on the professionals here, better pro-am, bang, into a downtrend. And that was a big exhaustion sell kind of move down here and gave us a bullish divergence. We kind of fussed around in this channel for a while, and then we've just had our exhaustion sell. I mean, this was an extreme kind of reading to the downside. So this one still came up as an exhaustion sell pattern, but you can see the reading is not as extreme as we've had before. Some blue professional bars here. I think that's kind of kind of getting into that move. We test down here with flush patterns going on, amateur down bars into this move, and we break above trailing stop on better pro-am, and that's why we've got kind of strength going on here. And when we look at better sine wave, here we go, that's the big break below a highest time frame support level here, bang into this downtrend. Here are the end of trends rippling through the time frames. So pull back to end of trend on the lowest time frame with the thin bars here, then pull back to end of trend with the intermediate time frame with the slightly thicker bars, and then pull back to end of trend on the highest time frame with the super thick bars going on here. So end of trends rippling through the time frames. We test, and this is second cyclical turn after end of trend. So end of trend on the highest time frame, one cyclical turn after the end of trend on that highest time frame, 2 cyclical turns after end of trend. And what that helps us do is we've had a trending move play its way out with the end of trend, and then we go through one cycle where it goes resistance to support. So the trending move is over and we've gone through a cyclical move, and that exhausts that energy on the downside that allows us to start thinking about trending moves breaking in the opposite direction. And you can see here we're breaking above the lowest time frame, we're breaking above the intermediate time frame, and we're starting this next kind of look up into an uptrend. Yep, we could find resistance. We've had a cross on the highest time frame. We could come down and see where the professionals kind of step in, but overall the downtrend in DBA in my mind is over because of this activity, and we're starting to break into an uptrend. So we should be looking for intermediate kind of trends in the ag sector. And when we look at it on the triple signal kind of chart, so this is the best of the better indicators all on one chart, so you can look at signals where all three non-correlated indicators come together. Here's the first move where we topped out, and there's our signal to go short. A little bit late into that move, but as soon as it kind of breaks this support area, that's where we're looking for a short move. Three indicators: exhaustion, buy, bearish divergence on better momentum. Number one, we break the trailing stop in better pro-am. Number two, and we're overbought with the background in gray here on better sine wave here, and that's why we roll over. And then we're looking for signals to go long. We just had that this week with the break up, and it's because we've had exhaustion, sell, bullish divergence, flush, bang, one, breaking better pro-am, two, and it's oversold, better sine wave here, three, non-correlated indicators, and we're looking for that. So that's why I'm still kind of bullish on the ag sector, but you know, it's been choppy on the three markets that I look at, which is corn, soybeans, and wheat. So let's go through our tick bar charts and let's look at what signals were generated this week. The euro, now I said I'm long the euro, but that's based on the 500 tick bar chart. So I'm looking at a lower time frame to kind of enter into this market. You can see this week's activity from the yellow bar to the yellow bar. There's all those blue professional bars here at 108 and a bit. Blue professional bars, as soon as that low gets broken, bang, we're in a downtrend here. Exhaustion, sell, bullish divergence. There's no blue professional bars at the low here. So for me, you know, that 500 tip bar chart is just a real kind of short-term little bump in the euro. And let's see if we get some signals this week to kind of go long euro for a longer-term trade. British pound looks nice with all those blue professional bars kind of coming in here. Oversold, exhaustion, sell here, but we've had a little bit of fly in the ointment here with exhaustion, buy, and bearish divergence. That's got in the way, and so that's why we've not had a triple signal there. I had a question on the YouTube video last week. Beg your pardon, I can't remember who that was that asked the question, but they were asking about the arrow indicators on these charts, and were they something that was new? Yep. They're kind of a year and a half, maybe 2 years old since we released the triple signals, and they're sign of strength, sign of weakness, kind of that you're looking for kind of confirmation. If you're late into a trade, so for example here, British pound kind of short here, that's a great kind of re-entry point here for a continuation of the downtrend. Here we have kind of breaks into an uptrend, and they kind of give you kind of confirmation that you're kind of trading in the right direction. You know, so here, and they're all based on better pro-am. The trailing stop, you know, the professional activity is absolutely key, and you've got to stay in line with that. So it's kind of trading off the signals there that give you kind of re-entry points or confirmation points. So British pound, yep, let's see if that kind of continues to rally. Aussie dollar, what did we have this week? No, this week we had signals short. This was a nice one here, and we kind of chase it back up to 70. All the blue professional bars kind of selling it down. We kind of continue down. So we've got a ways to go because the pro-am signal has to trail back. We've got to see blue professional bars down there. So we're still kind of in a downtrend in Aussie. Japanese yen, that was a nice signal here. Friday into Sunday, Monday here. Exhaustion, buy, bearish divergence, flush pattern. We break the pro-am, bang. There's the blue professional bars selling down that break below 76 and a bit. Bang, we're into a downtrend kind of down here. No exhaustion sell on the downtrend yet, but that was a nice move kind of all week short Japanese yen. So that's currencies. E-mini 13,500 tip bar chart. Choppy this week. So this is, you know, Sunday into Monday, and there we got you know, the signal kind of long here, and choppy activity here, and it only was the retrace here at 41.60 with blue professional bars here that was really nice, and there's a nice re-entry point with the arrows bearish divergence on better momentum, re-entry point on the arrows, sign of weakness, bang, and we kind of head down here. So still weak on the 13,500 tip bar chart. And bonds, yeah, bonds were trying to catch last week, trying to catch this week. I don't know, maybe this will catch. You know, we've got exhaustion, sell, bullish divergence. Some blue professional bars were starting to break above trailing stop here, so maybe the bonds will start to rally this week. So gold, silver, Bitcoin. Gold in a big downtrend, no signals kind of on the way down, unfortunately, because we didn't get exhaustion buy up here at the highs, and we don't have exhaustion sell down here at the lows. But on silver, I think we do. Yep, silver has triggered this week. There's exhaustion sell, blue professional bars. We're oversold after topping out 24.5 here with that nice signal short. Bang, bang, bang. Couldn't catch in this area, kept on coming down, bang. And this is exhaustion buy, maybe getting the move going here on silver. So silver, we got a signal. And Bitcoin. Bitcoin, wow, we're up at 25,000 on Bitcoin. We came into these lows and 2150 held, bang into these highs, and we've had signals kind of short because the blue professional bars kind of came in bearish divergence. So 25,000 psychologically important area on Bitcoin, so maybe there'll be some profit taking there and a little bit of weakness early this week. So let's talk about these kind of commodities that I was hoping last week would kind of catch and bust up, and we didn't get it. Crude, so they're into Sunday into Monday, or Friday into kind of Monday there. We got triple signals to kind of go short at crude. We didn't get the bust above 80 there. So that was unfortunate, but you know, we're in a downtrend on crude. No blue professional bars come in. The trailing stop on better prime is miles away. Natural gas, again, at some point natural gas will trigger long, but you know, we're still in this $2 kind of zone. Beginning of the week we got short kind of patterns, but we came back to test into that area. Then another short signal here at 250, bang, we're down at 225s. So natural gas still not wanting to pop yet, but I wasn't so keen on copper last week, but this week kind of copper is kind of held at this $4, I mean, psychologically super important kind of level down here. Hasn't signaled a triple signal because we never got oversold in this area. We were oversold back here, but it's kind of looking strong because the blue professional bars came in here on the retrace. We had exhaustion, sell, bullish divergence, break into a bit of an uptrend. Blue professional bars kind of come in and we're nicely above here. You can see here's the sign of strengths kind of coming in, bang, bang, bang. So copper, which I wasn't expecting to be strong, is actually strong after this week's activity. And then we didn't get the break on corn. You can see here over the last 2 weeks, all of the long signals kind of going off, and we're stuck in this kind of fairly tight-ish range, 668 to 688, so a $20 kind of range, and we're trying to catch, but we haven't had the break. This break kind of failed. We come back down, exhaustion, sell, bullish divergence, you know, more signals. So corn trying to hold and break back up through those highs. Soybeans. So what was I trading? I was trading this breakout here, which just failed. So that was Sunday into Monday, and so I got into that trade there, but it never went my way. Got out when it kind of broke down. And we've got short signals at the moment based off that exhaustion buy bearish divergence. So it's trying to hold with blue professional bars kind of come in here, but we've not had exhaustion sell. So waiting to see on soybeans. Wheat here. Again, all those blue professional bars now look like profit taking into those highs because we're breaking below that kind of important area there, and we're kind of weak, and that's maybe getting the move going. So this weekend, a little disappointed that my calls didn't kind of work out last week for kind of breaks in crude and the ags, but them's the breaks. Just have to kind of take the signals as they appear. And I'm not going to say directionally what I think is going to happen this week. I think we're going to have a little bit of strength in the E-mini and then test back down into those lows. Obviously we've got Monday, President's Day, so we've got a little bit of a thinking time on Monday, and I think on Tuesday we got FOMC notes kind of released, so that'll be interesting and maybe kind of cause the next kind of movement or next leg to set up in these markets. So there we go. Hope your trading is going well and looking forward to next week.